Hello, this is Andrew Thake from Minds and Money. Delighted to be joining with you for today's fireside chat by Joe Mazumdar, editor and publisher of Exploration Insights. Delighted to have you with us again, Joe.
Andrew, thank you very much for having me. Happy New Year.
And Happy New Year to you. So let's start with an opening question. How well did your portfolio perform last year?
Well, the companies that we had in the portfolio as of the end of the year, their performance during the year was down about 9%. I closed several positions during the year that gave them, a modest marginal gain of about 8%. At the end of the year, the open positions of 20 plus companies, gave me about 55% unrecognized return. Since that time, just last week or just recently, I've modified the portfolio again, concurrent with some of the themes we'll discuss, but basically moving from some gold exploration grassroots stories to more base metal stories and some a little bit more liquidity.
Mm-hmm. So in terms of, I guess, then that sort of brings us nicely on to the next question. What key investment themes do you expect to see for 2022?
Well, I think like the theme that we have seen towards the latter part of 2021 is the cost escalation of development projects for producers, the margins getting contracted specifically for precious metal producers, development projects seeing big increases in capital. The biggest one to the latter part of last year was, that got all the headlines was Argonaut Gold's Magino project that had a significant increase. I think it was like 290 million going from about, was it 510 to 800. But now we're seeing South 32 as well with their Hermosa project in southern Arizona, that the Taylor project. That project, that's gone well over $1 billion. And I think the PEA, the original PEA was around 500, 550. So we're seeing, some of it is scope, because you got to watch, when the actual study was and what you're comparing it to, and the embedded in cost escalation that we've seen over the last couple of quarters, or let's say 5 months, has been significant. And so, timing matters, but also as people are looking at the project and more engineering is done, the scope changes, and that could bring in a lot of additional capital expenditures, which we're already seeing. So I think that theme will continue, but I think it'll probably impact the precious metal producers, potentially more so the base metal ones, because their costs, their revenues might go up higher in this market than potentially the gold price, which might meander a little bit more. So we might hit a flat line gold price, which is still good, maybe 1800-ish, but they're going to be hitting that line of margin, cost margins, and that will probably contract their own margins.
And just as a follow-up question, in terms of these escalating costs, are these costs which are completely out of the control of the mining companies, or is it costs which are within their control, or is it a mixture of both?
Well, it's almost everything, because when we looked at the inflation hit 7% in the States, it was goods and services, and embedded in that was labor, which we hadn't seen previously because the labor markets now are very tight, especially for skilled workers. And now we have energy, $40 to $60 oil is now looking like $80+ oil, cement, steel, everything has gone up. So even if you're scoping the same project that you looked at, let's say just last year, there's easily a 20% increase in those costs, but what we've also seen is scope changes, and we're seeing sort of 40 to 50% increases in capital. And so the problem is right now is that, how do you fund the increase? If you're a major diversified miner like South 32, there's a potential to access capital from your own free cash flow that you're generating in this market with higher prices for their commodities. But if you're a non-cash flowing development play, then it's a bit more dicey as to where you get that additional capital.
Sure. So I mean that kind of partly answers most of my next question about financing trends. Juniors versus majors. Um, but perhaps also in terms of the financing trends, also be interested in your thoughts about which sort of like commodities might see some key financing trends in, and also whether you think that we'll see any sort of financing trends with regards to jurisdiction.
Yeah, so in terms of financing trends, what we saw last year, I mean, we saw a significant increase in equity financing transactions driven mostly by the juniors. And so what we might see is that might curtail a bit because most of that financing was directed to gold companies. And then as you see what was actually spent on the ground in terms of exploration expenditures, that money was taken used by companies in jurisdictions like Canada, Australia, and the US, predominantly to look for gold. So if gold sort of meanders next year, or this year, sorry, maybe the financing sentiment might not be as strong for gold. And if that's the case, then right now, what we've seen also is a bigger increase in base metals. So people looking for copper, nickel, and also especially commodities like lithium and other things like that to feed that metals that reduce greenhouse gas emissions or the battery sector. And that's more sexy right now probably than precious metals. But my question is, does that person that's in the precious metal sector because they've been in it forever convert to looking at base metals and these other ones? I'm not sure if that's a one-to-one such that we might not see as many financing transactions as last year in 2022.
Will we also see that sort of like increased interest in, you mentioned base metals and lithium, and perhaps also like we can throw uranium into the mix? Will also that flow through into, say, M&A trends and also exploration focus?
Yes, well, we'll definitely see. I mean, the money drives it. So if you can get money to look for copper and nickel, you'll take it. Especially if you were looking for gold before, and then suddenly you convert to look for copper and nickel because that's what the market's telling you to look for. We'll see more M&A, like the consolidation in the gold sector was transferring, ounces from a single asset producer like Pretium into a diversified precious metal and copper producer like Newcrest. Mega merger, the last one I would think between Agnico and Kirkland, to basically rival Barrick and Newmont by showing, hey, I'm all low geopolitical risk. Nobody else can offer that, and that's true. And they also are high margin assets. So that happened, and now we're seeing a little bit of M&A related to geopolitical issues like Hawkshield, the risk that they might get their mines shut down in Peru, like Immaculada, that they bought a development project in Brazil. And so suddenly now that there's less producing companies, it tends to be a little bit more suitor specific about what they're looking for. The biggest surprise, not surprise, but I mean, it is out of trend would have been Kinross's purchase of Great Bear Resources, which didn't have a resource, which is not what we've been seeing. What we've been seeing more is M&A for low risk, already operating assets that don't have any resource risk, no permitting risk, no development risk. They're already operating. We've seen more of a trend to buy those than development projects or exploration projects. So that was a bit of a off trend. Good for the market and that, but definitely off the main trend of what we've been seeing.
Sure. I'm just also keen as well is, and I've often had this discussion with sort of like uranium bulls since joining Mines and Money. I've often been, if I'm being honest, I'm a bit of like a uranium sort of like skeptic, because as I joined Mines and Money in 2014, everyone said now's going to be the year of uranium, and it never ever quite happened. Now, last year, I think there was a dip. I'm going to say it was October 2021. It was a pretty good year for uranium, but but apart from that October 2021, it was a pretty good dip. It was a sort of a pretty good year for uranium. What do you think kind of holds in store for uranium in 2022?
Well, I mean, uranium sort of the same story. There's a lot of inventory out there that's slowly being taken out, and it's held by a lot of it by the nuclear reactors and the energy producers. The market, I think what's been driving the price and also the sentiment is the physical market is gotten a lot tighter with these physical trusts that are actually consuming what's on the spot market, raising the spot price. But really what we need to really see that trend that uranium is back, and people are talking about it like okay, this is a commodity that's going to reduce greenhouse gas emissions. So we're going to put it in that sexy commodity bracket like all these battery metals. Then that will definitely raise, as if it needed it, raise that uranium awareness from other people coming into the market. But really what we need to see, or what I need to see, is those long-term contracts, those producers saying, okay, now I really need to make sure that I can get the uranium I need, because these guys are holding back because they don't want to sign like they did before $60-$70 contracts when the spot price is $25. And so they don't want to get caught up in that. But if they see the long-term price going up over 60 to 70 bucks, and the incentive price has to be around 50 to 60, and they need to get the material that they need, then I want to see where that happens. The physical trusts might tip the scale and force them to actually start signing those contracts. For me, that would be the big turn in the market. And so, I own, a uranium producer that's sort of levered to that scenario, and I will continue to hold it for that. But I can't tell you the timing of that scenario.
Sure. One thing that I know that you do a lot of exploration insights is obviously analyzing recent drilling and assay results. Which company's recent drilling assay results have excited you the most, and why?
Well, I would say, a couple. Okay, so one of my top picks is Radius Gold, and Radius Gold has two joint ventures, one in Mexico, one in Guatemala, precious metals. And, the joint venture, the Amalia joint venture with Pan American, is getting more exciting as they keep drilling new targets and hitting decent intersections, such that they could cobble together potentially, an over 1 million ounce gold equivalent resource, which, Radius would still hold a significant part of, that Pan American has to still earn into and make cash payments for. So for me, that's interesting, given Radius's market cap, given that they don't have to pay any money into it, and the majors operating it. But also in Guatemala with Volcanic Gold, a junior that's raised, significant funds last year at least. They're spending the money and they're getting the results, and that looks very interesting as well. So for the valuation that Radius has, the fact that I don't think they've raised capital in the markets since, I don't know, 2008. I don't know. It's a tight share structure. They're not prone to go back to the markets. Other people are funding the exploration, and I think that's going to be a trend in 2022. If financing risk goes up, those sort of companies that don't have to fund those sort of results, and everybody's waiting for them to go back to the market, if they hit something or they don't, they won't be required to, so I think that might be something, a trend for 2022, as well as, the compressing margins in the precious metal sector might make royalty companies more attractive, especially the junior ones that have cash flowing royalties, which are hard to come by. And if we look at that, if we think about that and say, okay, hey, Generation Mining, which I own shares of, did a deal with Wheaton Precious, and usually these stream deals are cost of capital about 15%. The cost of capital for that stream on the precious metals, their copper, palladium, they did precious metals, it was only 5 to 6%, which is remarkable. So it says to me that there's not a lot of those streaming deals out there. Now, I think Wheaton Precious just did a deal on an Ecuadorian project that Adventus have, the copper project there. So these deals are happening now as these precious metal companies are looking to finance. I'm sorry, these base metal companies are looking to finance and are more than willing to stream their precious metals. That is definitely a trend that we'll see in 2022, because the financing market, as the risk goes up, the royalty and streaming companies will take advantage of that.
Yeah, and certainly the companies you mentioned there, Radius Gold, Volcanic, and Generation Mining, is companies have got in common. I mean, obviously, apart from their recent results, also great sort of management teams, and they've also been at sort of our recent Mines and Money events as well. So a couple of things in sort of like common there. Again, from a Mines and Money perspective, and I'll answer my own question first. I think in 2020, for us, it was probably silver. In 2021, it was lithium, in terms of, I guess, where we saw the greatest increase in mining companies attending. 2022, what will be the hot commodity?
It'll be a combination of nickel and copper. Lithium will still be strong. We'll still see a lot of M&A, because what we'll see is the development pipeline contracting. And so what the other trend that we've been seeing is the private equity companies that have bought these out of favor commodities, 5 years ago, let's say, are now vending it into the market. So Sibanye bought a copper and a nickel project from Appian, I believe, in Brazil. Because they were looking for more battery metals, so, and there was just nothing to buy, and the private companies held them. So we might see more of that going as those private equity companies try to take advantage of the market as they close their funds down, and then release these things back into the equity market. And those producers that don't have development projects that are scarce, permitted, they're looking for those. They're definitely looking for those operating assets.
Yeah, I mean, again, it's interesting you mentioned the Appian Sibanye deal. That was our deal of the year at Mines and Money London, and there was obviously a lot of good deals done like last year, but that was a classic case of obviously a private equity company going in and sort of like turning down something and just creating absolutely tremendous value for everyone concerned.
Yeah, and the thing is that they have that patience that the equity markets don't have. So they can take these assets, hold on to them for an extended period, and then vend them when the market's better. Whereas as retail sector, in that we tend not to have that kind of patience to hold on to a stock or that long.
Sure. And if there was one commodity you'd say avoid in 2022, what would it be?
Yeah, I'm not sure right now. Like the commodity sector is really sort of tight, and one of the things that's making it very tight is, permitting. It's hard to permit projects, like we talk about, in the States, we talk about low risk jurisdictions, but, there's problems permitting in Minnesota. It takes a long time to permit in Arizona. Like anything besides Nevada, it takes a long time. And if you have a significant proponent against it, it could take even longer to never. And also what we've seen is sort of creeping nationalism as well. So, Cobre Panama with First Quantum, they had a royalty structure and a deal with the government, and then the government says, oh, hang on a second, we're not getting much money out of this, because the royalties on gross profits, and we're not seeing any money, so we want to raise that royalty, and otherwise we're not going to reissue your permit. So that, and then we're seeing higher probably taxes, potentially, like out of Peru and Chile, which are two major copper producers, which might, make companies rethink at least their major investments in terms of brownfield expansion in the copper market. And one of the things that's potentially delaying the supply gap into 2026, 2027 in copper are those brownfield expansions. So if there's any delay in those brownfield expansions, and the copper market might get tighter quicker.
And just as one final question, and I know I asked exactly the same question to you when I interviewed you this time last year, and I hope this is the last time I actually ask you this question, but what will be the ongoing impact of COVID-19 on the markets on the markets for this year?
So I would say, like, depending on the commodity, one theme is that, COVID is not impacting market volatility anymore. There was that one impact in March 2020, but since then, if you look at the VIX, which measures market volatility in the US, it's actually been going down. And even though the Omicron wave that came up and was the biggest spike in cases, the idea, the thematic is that, it's not as, virulent as the other one, so it won't impact the market as much. And so, they basically pushed that one off, even though the number of cases far exceeded any other waves before. The issue about COVID right now is sort of what it's going into the market, tightening up labor, increasing labor rates by dropping availability. That's having an impact on costs. How you have to operate means lower productivity, higher costs. And supply chain issues. You can't have that many people on the dock, so you can't grab the the goods and services that are coming over. So all of that is having impacts on inflation, and that is what's impacting the market. With precious metals, it's about real rates. The real rates impact the gold price. If people think that the real rates are going to rise, which they do, gold price is not going to, do well, even though, rates have been negative, real rates have been negative since 2020, but it doesn't matter. It really is a sentiment that, are they going to get more negative, or are they going to start getting positive, and stay negative? And COVID could impact that by its impact on inflation, and when COVID goes down, then maybe we can see a little bit of that inflation ease up, the inflation that's related just to COVID, which is mostly, I believe, labor.
Yeah. Well, I mean, we certainly hope that, I said that that's the last time I ask you a question about COVID-19, and we hope certainly by this time we're kind of back to normal. We've certainly obviously seen a few in-person events, obviously recently have to go sort of like shift dates, but hopefully for everyone, that's the last time that happens. And we really hope to see you at some of our events in person later on in 2022. But that's all we have time for today. And once again, thank you very much. That was Joe Mazumdar, editor and publisher of Exploration Insights. Thank you very much for your time, Joe.
Thanks, Andrew.